to our podcast, Keeping It Real.
Today's going to ruffle some feathers, and I'm okay with that because honestly, if it doesn't, we're probably not saying anything meaningful. If your entire financial strategy is just buying index funds, there's a very real chance you're leaving money, protection, and opportunity on the table. Now, I know right away people are thinking, what are you talking about? That's the smartest, safest, most recommended strategy out there. And that's exactly why we're talking about it.
Yeah, and let's be clear from the beginning, we're not here to bash index investing. Index funds absolutely have a place. They've helped millions of people participate in the markets in a low-cost, accessible way. But the problem we're seeing, especially over the last few years, is that this idea has turned into something bigger than it really should be. It's gone from being a tool to being treated like the entire strategy. And those are two different things.
What's happening right now is interesting. There's this growing narrative, especially online, that says you don't need an advisor. You don't need a plan. Just buy ETFs, keep costs low, and you'll be fine. On the surface, it sounds logical. It's simple, it's clean, it's easy to understand, but simple doesn't always mean complete.
Exactly. And what gets lost in that message is everything around investing, because investing is only one part of financial planning. It's not the whole picture. So we're talking about tax strategy, risk management, cash flow planning, behavioral coaching, estate planning, insurance structuring. None of that gets solved by just buying an index fund. And yet people are being led to believe that it does.
Right. Let me take this a step further, Irene. If someone says, I invest in index fund, my next question is, okay, but what's your strategy? What's your plan? Because owning an ETF is not a strategy. It's a vehicle. It's like saying, you know what? I drive a car. That doesn't tell me where you're going, how fast, or whether you even have a destination.
Yeah, that's really such an important distinction. And I think what's happened is people have confuse access with expertise. Just because investing has become easier doesn't mean it's been simplified at a deeper level. Markets are still complex. Human behavior is still unpredictable. Life throws curveballs still. And that's where the cracks start to show in a just buy ETFs approach.
Let's talk about behavior for a second, because this is where things really start to break down. The assumption behind passive investing is that people will stay consistent, they won't panic during downturns, continue investing during uncertainty, and they'll avoid emotional decisions. But let's face it, in real life, that's not what happens. We've seen it.
Yeah, over and over again. People say they'll stay invested until the market drops 20%. Then suddenly they stop contributing, they start questioning everything, and they consider pulling out. And at that point, the issue isn't really the ETF, it's really the lack of guidance, because nobody prepared them for that moment.
And this is where the conversation shifts, because the real value of an advisor isn't just picking investment, it's helping clients stay disciplined, understand risk, make decisions in context. An ETF doesn't talk to you off the ledge when markets are crashing.
Yeah. If we had to summarize this part, Phil, it would be something like this. Index investing works if everything else around it is handled properly. But that everything else is exactly what most people are missing. And that's where the gap is.
Let's break down some of the specific risks that don't get talked about enough. First, tax efficient. People love low fees. And that's fair, but they rarely think about taxes. Where are your investments held? RSPs, TFSAs, non-registered account. What's your withdrawal strategy later on? Because you can lose far more in taxes than you ever saved in fees.
Yeah. The second would be sequence of returns risk. This is a big one, especially for people nearing retirement. Two people can have the exact same average return, but if the timing of those returns is different, their outcomes can be drastically different. And again, an ETF doesn't manage that for you. That requires planning.
Right? And third, lack of diversification beyond markets. And most people think diversification means different ETFs, but real diversification includes insurance, guaranteed income strategies, asset location, liquidity plans. If everything you have is tied to market performance, you're more exposed than you think.
Yeah, this one is powerful, but overconfidence. When people feel like they've figured it out, they stop asking questions, they stop seeking advice, and really that's when blind spots grow.
So where does this leave us? Because again, we're not saying don't use index funds. What we're saying is don't confuse a tool with a complete plan.
Exactly. A more balanced approach really looks like this. Use ETFs where they make sense. but build a framework around them. That framework should include a clear financial plan, defined goals and timelines, risk tolerance that's actually tested, not assumed, tax efficient strategies, and protection for downside scenarios. Because really, life isn't linear.
And for advisors listening to this is where you need to step up. If your value proposition is just, I can pick investments for you, you're going to lose to do-it-yourself investing. And honestly, you should. But if your value is clarity, strategy, behavioral coaching, long-term planning, you're no longer competing with ETFs. You're complementing them.
Mm-hmm. And really, at the end of the day, the question isn't, are index funds good or bad? The better question is your overall strategy complete? Because that's what determines outcomes, not just the investments you choose.
And if today's conversation made you a little uncomfortable, that's good. That means you're thinking, because the goal here isn't to give easy answers. It's to challenge assumptions and maybe help you to see your financial world a little more clearly.
And that's keeping it real. Have a great day.